Hey guys, today I'm teaching you how to never lose a trade. Now that's quite a bold statement, and of course you will lose some trades trading the financial markets. However, I had months where I never lost a trade, placing 20 to 30 trades. This can happen and I'm going to show you how. So let me teach you the first concept, which is trade the trend rather than the break of trend line. Hope that makes sense. Let me give you an example if it doesn't. So we have our downtrend just over here. Let's mark it, and as per usual we would be waiting for the market to bounce off the trend to trade towards the downside, or we would wait for the trend line break, and let's see if that happens. We eventually get a trend line break just over here. This is your own drawn trend line. However, the question should be, how much significance does this trend line break have in a market direction that's currently quite bearish? Well, the answer is not so much. Yes, we might have a spike towards the upside, maybe to retest this previous area of supply zone. However, it wouldn't give us a great entry position. This is why you want to use extra confirmations like the moving averages. A simple indicator yet so powerful. The moving averages indicate that there was a break of the 20 moving average. However, we have the 50 sitting right where I said the supply zone is. The small change immediately tells me that, man, maybe I should be selling just over here in the supply area once the market price reaches this level. So if we have a look, the market does indeed push towards the upside. It has had that trend line break, right? But as we can see, we had a huge push towards the downside after we have touched the 50 moving average and the area of supply as well. This is why you want to trade the trend rather than the break of trend line. Trend line breaks that you draw happen quite a lot. As we see, it goes down every single time. However, the moving averages calculate the candlesticks in a certain way. This is why most banks and AIs are based on the moving averages, because they react heavily, especially to the 50 and the 200 just over here. This is why you should be expecting a lot of sell orders once the market reaches this area line. And once it does, as we can see, this candlestick would have been our entry candlestick. We can straight away short this position just over here. Gives us a great risk reward, and we can aim for the previous bottom level just over here. And this is what? Risk to reward ratio of 2. That is perfect. Let's see what happens. And it continues dropping down. So the trend line break was nothing significant. Although the trend line break did push towards the upside, it would not give you a great risk reward level. You would have been scared that the market could potentially turn around because of the moving averages. This is why you want to be trading off the 50 rather than the trend line. Trend lines break all the time. This is why I love trading the moving averages by itself. And as we can see, we can redraw the trend line straight away to make it make sense. It's just another confluence. It's okay if you see it and draw it, but take what it says with a pinch of salt. Now, moving on further and learning how to never lose a trade, we have multiple time frame analysis, and every good trader knows that this is crucial to your trading success. Let me give you an example. So we're currently on EURUSD hourly time frame. The market has been very bearish. We can see that it's making new lows every single time. We had an attempt of break and then continued moving towards the downside. If we take a look at the 4-hour time frame, we can see the same thing. Huge push towards the downside, bouncing off the 200 moving average at the moment, broke the 20 and 50 moving averages. Nice push exhaustion scenario, maybe gonna continue moving down. However, you would have been very wrong, because if we take a look at the daily time frame, it tells me a totally different story. The daily time frame, which is much bigger than the latter, we can see that it's currently bullish. The market is heavily trending towards the upside, and it's currently touching the 50 moving average, right? It manages to break your short-term moving average, which is the 20, totally fine. 50 is the important bit. Over here somewhere, you could have potentially entered a long position. Now, even though the 4-hour and 1-hour moving averages are currently trending towards the downside, it does not matter. If we manage to enter the trade somewhere over here, maybe even make our take profit level, let's say 100 pips, Stop loss level, let's say 50 pips. That's good enough for a quick bounce because typically Euro USD moves around 50 to 60 pips. So stop loss around there should be okay. So if we catch the move that is trending down, and we know that the 50 moving average on the daily time frame is around this area zone, we know likely we're gonna have a pullback. So this is a demand area for the daily 50 moving average, and likely we're gonna see a push towards the upside. We can have a look at the hourly really quickly, and let's take a look. Let's see what happens with the trade. It continues moving up, down, and there we go. It actually manages to reach this area zone. Let's take a look at the 4-hour. Manages to hit around 100 pips before it eventually turns around and does something else. You let the market play out. You never exactly know where it's heading, but you want to trade patiently once it's in really good levels. And the daily area zone just over here was just enough for us to bank 100 pips. Then later on, we don't care what happens. As we can see, it goes further up actually before it goes down. So the 50 moving average has been respected, pushed towards the upside, had a little break, exhaustion back, and then went towards the downside again. But it doesn't matter because we already made that initial profit. So the first touch of the 50 moving average is a great demand zone. Likely there's going to be a lot of buy orders in this area. Once the price level triggers, the market pushes up and we are making a lot of money. Now, moving on from that trade, let's talk about how important RSI is on the higher time frames. I'm talking about the monthly area zones, and this is super important, especially when a currency pair is dipping towards the downside without the sign of stopping. If it does that, we're gonna have what I like to call a rubber band effect on the monthly time frame, which is super important. And this is where RSI is beautiful at doing the right job. So you open up the relative strength index and you take a look, and the market is below the 30 area of RSI. As we can see on TradingView, it's actually marked with slight red highlight. It's telling you it's oversold on the monthly time frame. If we take a look at the weekly, it's also oversold, which means the market is currently slowing down. It's kind of sluggish, and we can actually enter a reversal trade. And these are beautiful for long-term trades, maximizing your pip gains. As we can see, we could do 600 to 1,200 pips. That's quite a lot, of course, but you can obviously take a lot more smaller trading positions and see how it goes. But RSI indicator definitely works. And if we just take a look at what happens with this trade, look, it goes towards the upside heavily, respects the moving averages, and then has a little pullback. As we can see, 50 is reacting one more time. But the important thing is the RSI is oversold over here, and then it pushed towards the upside. And if you don't believe it works on the higher time frames, well, you're really wrong, because if we take a look over here, RSI has been oversold. Yes, it had a little play bout, but it pushed towards the upside every single time. And if we just continue looking, we can see that the RSI again oversold over here. What happens? Pushes the market further up. But this is really only good on the monthly time frame. So if you see a currency pair that's sitting over here somewhere on a substantial level, you can look at great reversal trades. And I made the most money in Forex with reversal trades, by the way. One of my students recently passed their FTMO challenge with a reversal trade as well. So trust me, patience is key. You're not gonna have these moments all the time, but that's not the most important thing. We want to never lose a trade, right? So we want to have the best time and conditions possible for the trade. So if we see a nice area of demand zone, and we also have the RSI telling us that the market is freaking oversold, we should probably start buying or look to buy and then take positions as they go. You know, we have the moving averages, they will act as a resistance and all that. Okay, moving on, let's talk about trading with the trend. Most people will tell you that trading with the trend is good and you'll probably win more than you lose, and that's totally true. If you have the right placement, you can definitely do that. However, it's kind of stupid if you don't have the right supply and demand zones. I use pivot points for them, and just take a look at this. I have 3 pivot lines at the moment. We had that area of demand, the supply zone over here. This previous supply area is currently being broken. I call it the central pivot point. So it's currently breaking. Likely it's gonna continue pushing towards the upside. So we could potentially enter the trade over here, but it doesn't give us the best risk to reward because the moving averages are quite far away, right? Where is our stop loss going to be? Just over here, because we want to cover the 50 moving average. So not really great, right? Where is our target? The previous area of supply? Yeah, maybe, but we are risking a lot more than we would gain. And that is a crucial mistake a lot of beginners make. So what you want to do is this. You want to wait for the central pivot point to do its thing, right? So if it pushes up, that's totally fine. You missed it, right? Because the trend trade already happened. Maybe you could have entered just over here with the 50 moving average, would have been a better trade. But since the market is already moving, you want to be looking at this previous area of supply zone. I know there is a lot of sell orders just over here. So since it pushed towards the upside, we're going to have the rubber band effect. We wait for a candlestick confirmation. We get a doji near the area pivot line. This is an important step for success when trading. Trust me, once you see this candlestick confirmation, which is also a nice little confluence, you need candlestick confirmation. So pushes up, candlestick confirmation near an area of a lot of sellers over here, we would be entering short position just around here. Stop loss around 80 pips. We want to cover just the supply zone, and we can take our profit to the first area pivot line. 2.13 risk to reward, potentially even more to this previous area zone where the moving averages are sitting. So this seems like a great trading opportunity. Now for extra confluence, we obviously want to use the RSI indicator again. This is the daily time frame, but you would be looking at multiple time frames as we previously discussed, and we see that the RSI is also overbought. The supply area is here. It looks amazing, right? We have great risk reward now. So even now, if we lose the trade, we know that we had patience, we had confluence, everything is right for a great reversal trade. And the potential for winning is a lot more than losing. And this is why you want to take the trade. So let's see what happens. It goes towards the upside, nearly stops us out, by the way, and then continues dropping down, and we would have reached our take profit low. And look at that, the central pivot line has been broken. What you do then, you wait for a beautiful bearish engulfing candlestick. It broke the 20, broke the 50. We can potentially enter yet another trading position just around here, increase the stop loss level a little bit more, and we can potentially aim to again trade this area zone. RSI is currently a little below than the middle line, but that's totally fine. If it's not overbought, oversold, that's still okay to enter. As long as the higher time frame is not oversold fully, you shouldn't be scared to take the trade. But obviously we have the 200 moving average over here as well. But let's just see what would happen with this trade. Pulls back and it definitely reaches the next pivot area zone. So imagine if I was with my FTMO account and I placed these two trades, I could have made a bunch of money. 277 pips on Euro USD with a 5 to 10 lot size is a lot of money for anyone. Okay, now let's talk about candlestick closes. Super important, especially if you're trading with the monthly supply and demand. I have the 3 lines that we talked about earlier. As we can see, the candlestick attempted to break the 50 moving average, you know, the central pivot line, the resistance 1 level. This would have been a problem if you have entered the trade once the candlestick was fully blue, you know, attempting to break, and it's showing, you know, 15 days left until the candlestick closes. Well, you would have been totally wrong to do that. Yes, it went towards the upside, but look what happened. The candlestick after 30 days, because this is the monthly we're looking at, would have closed just around here where the central pivot line is, and could have potentially indicated a lot of sell pressure. So the best thing you can do is wait for the candlestick closures. This tells me that this has a upper shadow, which is a great confirmation for a lot of sell orders. What you can do now is just enter the trade short. I would just go with the central pivot line, stop loss, target profit, something like this, 2.3 risk reward. Beautiful. Let's see what happens with this trade. It attempts to break it and it pushes the market further down. Just because you would have waited for the candlestick actual closure. You don't want to enter the trade when the candlestick is like this, fully going towards the upside, but there is still time remaining. You know, there's still time ticking, and if the candlestick has not closed yet, there is no confirmation for your trade. Trust me, after 10 years of trading, I have seen candlesticks, monthly candlesticks, move 200 pips in the last 5 minutes. So if you believe the monthly candlestick will close with 1 hour left, trust me, think again. Always think about that. You rather wait that 1 hour and get a slightly worse entry rather than get suddenly liquefied by the market because they decide to push the market further up, breaking all areas of supply and demand. Now, another thing, let's talk about commitment of trader report. This is pretty much futures in Forex, but a lot of people use this information because hedge funds, institutions, big fish that move the market, a lot of money is here. They look at these numbers, let's say Euro, British pound. From last week, it was 4,600. This week is 4,200, indicating there's a slight buying bias for next week, which this data you can use and start buying and selling. Let's say Mexican peso US dollar is in an all-time 52-week high. This tells us that Mexican peso could be going towards the upside for next week. And this is what you do. This data is 3 to 5 days old usually, but I utilize it most of the time. A lot of other traders use it. There is a popular FTMO trader that made $500,000, and he talks about commitment of trader report as well. So if I use it, a lot of other successful traders use it. You should learn about it as well. Since there's a lot of hype currently about crypto hitting new highs, let's talk about Bitcoin. Monthly and weekly area pivot lines were over here. I took some of my trades on Bitcoin as well, and as we can see, once it broke out, nice little push towards the upside, you close off your trade over here. You're waiting for a rejection. Since the trend is currently 20 and 50, you can trade with the overall market direction. So as I said, look, nice little rejection, pretty much touching the weekly area pivot line and the 50 moving average. This is where you want to enter on the lower time frames to catch these little spikes towards the downside. You open a position here, you close off over here. If it continues moving up, bullish engulfing candlestick, you can enter trades for continuations, but I wouldn't do that. I like to wait for these spikes over here. Look at that, nice spike back towards the monthly and the 50 moving average. Beautiful, right? And you can make a ton of money with Bitcoin at the moment, right? So if you're trading Forex, jump on Bitcoin US dollar as well. It's a great currency pair to currently trade. So with all that being said, hopefully your next couple of weeks or months are definitely profitable. You don't lose a single trade. You pass all your challenges. And if you want to learn how to trade, ebook down in the description below with VIP trading signals. And you may be interested with my Euro USD trading strategy just over here. I explained all my process, the way I do it, how I actually trade it and scalp Euro US dollar to make some money. Enjoy.